The Nobel Prize in Economics is awarded every year, but usually investors ignore it. Big mistake! Do you know who won it and why? In this video, I will show you the Nobel-winning idea and how I would apply it to the stock market. 33.8 yearly returns since the 80s. But, most importantly, which stock we should consider today to profit from the creative disruption Nobel Prize. But before we hear the theory, I want to show you the unbelievable results of an AI backtest based on it. The winner creative disruption portfolio, 65.8% 1-year returns and 171% average 3-year returns. So how is this massive outperformance even possible? It's all thanks to the Nobel-winning theory. So let's start from the beginning. This year, the economy prize was split.
With one half, the prize goes to Joël Moncur for having identified the prerequisites for sustained growth through technological progress.
Joël Moncur used historical observations to identify the factors necessary for sustained growth based on technological innovations.
For 400 years, we had world-changing inventions like windmills, printing press, but the economy didn't really grow. Moncur's genius was showing that the real economic growth only ignites when we have the scientific understanding of why it works. But for us investors, the real gold is in the other half.
And the other half jointly to Philippe Aghion and Peter Howitt for the theory of sustained growth through creative destruction.
This is the idea that can actually make us money. So let's focus on creative disruption. The idea is that firms invest in research and development to innovate and improve existing products. If they succeed, they become market leaders and earn profits. As results, existing firms are outcompeted and fail. An example we can all relate is the evolution of the phone. I remember when I was a child, we had this phone in the living room. When it was ringing, we all ran at it because we didn't know who was calling. Then Nokia arrived, and we never used the landline anymore. We were too busy playing Snake. Finally, the smartphone arrived, and Fruit Ninja replaced the Snake. To better understand this theory, let's hear it directly from the winner, Philippe Aghion.
The idea that new innovations displace old technologies, new innovations make older innovations obsolete. So the new replaces the old. That's the idea of creative destruction, okay? And a coherent model around it, you needed innovation. So to have innovation, you need innovation rents, because without innovation rents, there is no incentives to pursue innovation activities. So you needed a model where you have innovation rents. But on the other hand, because you have creative destruction, yesterday's innovators are tempted to use those rents to prevent subsequent innovations, because they don't want themselves to be subject to creative destruction.
Listening Philippe Aghion, the first idea of creative disruptions that comes into my mind is Netflix and streaming replacing Blockbuster. Now that we understand the Nobel-winning theory, how can we apply it to the stock market to pick the winners? The central takeaway is that in the last 200 years, long-term economic value is driven by innovation and creative disruption. Nothing else. So the two key questions are: who are the innovators creating the change, potential long position, and who are the incumbents that will get destroyed by this change, potential short position? To research this idea, I used AI as suggested by the Nobel Prize Moncur himself.
I see AI primarily as a magnificent research assistant. AI is another powerful tool, and everybody in this room, unless I'm terribly mistaken, is using it in some way, and I'm as guilty as the next guy.
I asked AI to make a list of the most relevant innovations from 1984, my birthday, till today. I also asked it to establish the exact date the idea broke out and became popular, not when the tech was invented, but the breakout point of adoption.
On January the 24th, 1984, Apple launched the Macintosh, the first commercially successful personal computer with a mouse and graphical interface.
I was still inside my mom's belly.
On June 1st, 1987, Johnson & Johnson launched the world's first disposable soft contact lenses. On December 29, 1987, the US FDA approved Prozac, the first antidepressant.
And the list continues with the World Wide Web, smartphones, e-readers, cloud computing, 3D printing, blockchain, mRNA vaccines, until November 30, 2022,
when OpenAI publicly released ChatGPT, which became the fastest-growing consumer application in history.
Next step, I ask AI to pick 2 stocks that should clearly benefit by that invention and one that could get disrupted. For example, when Steve Jobs unveiled the first iPhone, AI picked Apple clearly and AT&T as winners and BlackBerry as a loser. When Tesla began delivering Model S, AI picked Tesla and Panasonic as winners and General Motors as a potential loser. And so on for all the 20 inventions. The results are just incredible. Let's check them out again. If we go long on the creative disruptors on the breakout day, after 3 years, we've seen an average return of 171.2% compared to 33% of the S&P 500. We could also hedge this by shorting the disrupted companies, which lose an average of 12%. The problem is that it's really hard to invest immediately as soon as a new product is launched. For example, I didn't know about ChatGPT until some weeks later, and I didn't know about the power of the smartphone until a year later, maybe. So let's see what happens if we give ourselves some time to reflect, be sure that the tech is a real revolution, and we invest 1 full year later. For example, ChatGPT launched in November 22, but we invest in November 23. Clearly we are late and we miss out a big part of the profits, but the creative disruptor portfolio anyway outperformed, with 63% gains in 2 years against 17.6% of the S&P. Honestly, this is just mind-blowing. Not only we could 5x the market if we identify the innovators early, but we could even go market neutral with a long position on the new technology and simultaneously a short position on the disrupted industry. I have never seen AI give such a positive conclusion.
The data is undeniable. Innovators don't just win, they crush the market, delivering an average 3-year return of over 171%. Meanwhile, the old companies don't just underperform, they actively destroy value, losing an average of 12% over the same period. This isn't a fluke. The gap between the winners and losers only widens over time. This proves creative disruption isn't just a theory. It's a fundamental law of the modern market.
If you are like me, at this point, the first question that comes to mind is, okay, what's the next innovation? Which tech is there that didn't break out yet, or that broke out in the last 12 months? Before answering, producing this video with the infographic, all the research was a lot of work. I do everything alone, so I would greatly appreciate if you could subscribe, leave a like. Even better, share it with a friend who doesn't like growth stocks and innovation. So, where we should invest? Lately there is so much innovation that it's almost overwhelming, but here is a small list of tech that are almost breaking out and should be carefully followed. AR glasses, improving really fast, we might get adoption soon. Long should be Meta, maybe Unity. Disrupted a lot of industries, potentially even smartphones. Next are humanoid robots. Only Tesla is publicly traded at the moment. We could potentially short a workforce solution like Manpower Group. Solid-state batteries. QuantumScape already bounced from $350 to $16 this year after closing its first big contract with Volkswagen. In healthcare, CRISPR and gene editing should break out at a certain point. Also, Google AlphaFold 3 should revolutionize drug discovery. This is what I'm following closely, but a bit further ahead but still worth checking out for developments are quantum computing. Even if you are interested, I would wait for a retracement at this point. Nuclear fusion, brain-computer interfaces. I'm sure I'm forgetting some technological disruptor, so let me know what's in your watch list. Personally, I only have Google in my portfolio for AlphaFold, DeepMind, Waymo. And some months ago I gave a target price of $300, but if you're curious and you want to know why I invested in this company, check out this video. I hope you enjoyed today's Nobel deep dive. Thank you for watching. Peace out.